Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Hope everybody has been well. I was traveling last week. I am back at the desk now. Let's go over really briefly the anatomy of last week's trade, and then where we are headed. We'll talk about yesterday a little bit and where we're headed today. So the issue with last week was you come back here to Sunday night. We did a reaction low at the daily mid band right here. Okay, we print that low at 79. At that point, we go up and we test two things: the old all-time high at 21.91.5, as well as the new weekly pivot at that point, which was 21.95. Those got broken through overnight. Then the key was the round number 2200 down to say 21.99. You can see here for the period of a day and a half, that was established as a floor underneath the market. The next two most important numbers were 2209 and 2214. So we covered those in the charts all week. We pushed up against 2214 on Wednesday morning. When that finally broke above, what you saw was a serious short squeeze, fueled by some news out of the ECB, but a squeeze nonetheless. Once the squeeze was on, Thursday and Friday were about morning dips that ground up to highs. 51.5 on Thursday, 55.75 on Friday. So we come into this past Sunday night. Instead of the big gap down, we do a big gap up. 22.64.75. We make a lower high here in the morning session yesterday up at 22.59. The rest of the day was pretty much about the bears trying to do the one thing that they have such difficulty doing, which is making that last lower high and then that deeper lower low that gets the weak shorts out of the pool and gives them an opportunity to really try to gain some ground in the market. Could they do it yesterday? No. Are they paying the price in the overnight? Yeah, they are. We go down and we do 46.75. In the afternoon, they're unable to overcome that. You open up in Globex, you do 47.75. You create a higher low, and they've grounded up all night long. They've got it up over the daily pivot at 22.54. They have traded as high as 22.58. And what the bulls need to do now is overcome this lower high at 59 and then push up and retest 64.75. The best opportunity for the bears is to turn either 59 or 64.75 into matching highs. Matching highs are always the setup of last resort. Okay, same with matching lows. It's the setup of last resort. We've tried to stop it at every other turn, and all we're left with is the last place it decided to stop. And that would be the situation at 22.59 or 22.64.75. So let's jump out on the daily chart. So that's where we've been. Where are we going? Well, we've had quite the band ride since the 7th, since Wednesday. We've got a big Fed meeting this week coming up this Wednesday, and that's really going to define for us where we are, in my opinion. So far today, we've not engaged the upper band. We've not taken out yesterday's low, like I was saying before, at 46.75. So for the band ride to end, you would want to see the bulls be unable to touch the upper band, and you'd like to see the prior day low taken out. If that's the case, it sets up a move, theoretically, through 46.75 to test 22.39.75 and test the 9-day simple moving average, which is the blue line there, sitting at around 22.27.28, although that's going to rise on a daily basis. You do have the weekly pivot down there at 22.28. So if Wednesday comes in and you get news which is negative for the tape and you get a negative reaction for the tape, the thing I've been telling my subscribers last week when I was away, this week, is you need to temper your expectations about what a pullback really is and take it as it comes. Maybe it's Wile E. Coyote off a cliff. It's possible. What's more likely is that it's going to come down and create another floor, somewhere above the last floor, and that should say 2191.92. I'll fix that before I send the charts out today. Somewhere above 2191.5, a very likely candidate would be 2228. If it breaks through there, then you've got the daily mid-band, but you have a lot of people squawking about how we're overbought and we're this and we're that. On a price basis, we are slightly, okay? But you don't get to complain about the daily mid-band because we were just there a week ago, okay? This is what happens when one side or the other blows the daily mid-band or blows a big level right off the bat on Sunday night and establishes it as either resistance or, in this case, support. You just get run out of town. And that's exactly what happened. A little bit at a time, but the squeeze is somewhere. Last week it was above 14. So if we get a negative reaction on Wednesday, 28 is an area that I'm looking for a retest. Potentially the daily mid-band again. But unless the bears come at those pullbacks with a lot of energy for more than just a reaction, those areas will ultimately be buys and we'll head right back up. It's one thing to trade to a level. You've got to trade to a level and convert it if you want to make any ground. That's what the bulls did last week. That's what the bears are going to have to do if they want to take any of that ground back. All right, everybody have a fantastic day. Follow us over at Twitter @PrincetonTrader. Come check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.